Hello again. Today's Tuesday. Happy Tuesday, everybody. So before leaving, I wanted to give you a little bit of explanation about credit scores and what's the importance of having good credit. In this country, if you don't have credit, you can't really do anything. Sometimes even buying cash, you can't buy cash because you have to finance some part. I've had so many clients that came to me and said, Maria, I want to put 50% down payment, but their credit sucks, so they can't even borrow 50%, So this is just an example. And if you can see the previous video that I posted about capacity, how much money you make, what debt you have, and then how much you're capable of making a payment, we estimated that that client could qualify for a mortgage of about $2,200 more or less. So this is just an example based on credit, solely credit. We have a client that has 740, we have a client that has 720, and we have a client that has, 620 and another 620. Now why I have two is because in a conventional loan, and this is assuming 3.5% down payment. In a conventional loan, the PMI, which is the premium mortgage insurance, when you borrow more than 80% of the loan of the purchase price, you have to pay that extra mortgage insurance. So that PMI, it depends, in a conventional loan, it depends on your credit score. And then in an FHA, you can have 580 or you can have 740 score. The MI will always be the same. So if you're a buyer, if you're a realtor, this could affect your approval as well. So let's just take a look at this really quick. Score 740, conventional, just for the sake, I'm doing minimum down payment 3.5 for all of them. Yes, you can buy conventional with a minimum of 3%. So I'm just putting a little bit extra so that way we're doing the estimate for the same as a minimum FHA 3.5. So 350 purchase price, loan amount 337. The interest rate, if you see here, it's much lower because you have a better credit score. 620, it's a little bit higher, and 620 on an FHA is a little bit lower, the interest rate. So your payment, this is a 30-year loan. So if you purchase 350, you put 3.5% down at 3.25, your mortgage principal and interest is 1470, 1541. 1520 because the rates change, right? Now, something that I want to show you here is the PMI. So on a conventional loan, remember I just mentioned that the rate, it depends on your credit. So conventional 740, you're in good shape. Your MI is going to be only 161, which is great. If your credit sucks and you can't fix it, and you are under contract, your MI is going to be 473. Why? Because the MI is a separate company on a conventional loan that they take high risks. So depending on your debt to income, depending on how much down payment you're putting, they'll calculate the risk, and they're saying, okay, this person said 620, credit is low, they're putting minimum 3%, 3.5% down payment, higher risk, 473. That's $300 difference in payment. Huge difference. 620 FHA, regardless of your credit, like I said, is a specific amount, a percentage. So it's usually 85% for every $100. So 0.85% is your MI. So if you do 337 times 0.8 divided in 12 months, that should be your MI more or less. So look at these two clients, or same client. I have 620 score. If I go conventional, my mortgage is going to be $2,600. If I do FHA, my mortgage is going to be $2,400. If I do conventional, $2,281. Obviously, same taxes, same insurance, insurance taxes. So total, 22, 26, 24. This is why you need to work on your credit, and before you get pre-approved or before you go crazy and shop for a house, you need to make sure that your credit is good, your income is good, you can qualify. For the example that I put in my other video that you can see how I come up with the capacity of this client, if that client that made $65,000 salary, his capacity, I think it was like $2,300. But if his credit sucks, I can't even qualify him for $350 because the mortgage was going to be $2,600 and his capacity was 23, so now he doesn't qualify for this house. So that's why whenever you're buying a house, credit is important. Capital, obviously, how much money you have saved, collateral, the type of property that you're buying. If you're buying a condo, maybe it's not approved with FHA. Capacity is your income, how much money you make. So all those 4 C's are extremely important, but there's so much more that comes into the approval. So again, you can take a picture, a screenshot of that. Credit, extremely important. If you can see, just know your numbers, get pre-approved, fix your credit. If you need help fixing your credit, I know amazing people that are working on fixing people's credit, and I've got great referrals. And that's it. I hope everybody has a wonderful evening. And if you have any questions, feel free to call me, reach out. I'm just a phone call away. Have a good night.